Good Thursday morning, everyone. Kip Harris here with VRA for our midday market update. This is brutal today, folks. If you saw Jay Powell's presser yesterday, and again, we felt for a long time now, for some time, that we're in a bear market, that these rallies are bear market rallies, and that we need capitulation before we can get a serious move higher that might extend for more than one day, like yesterday's rally did. We haven't had that yet. Jay Powell's got a serious credibility issue on his hands. He made some bold statements yesterday. Bold, and he made them time and time again. Like, it was the most dovish Fed commentary he could have given, and it looked like he was doing it to squeeze the shorts. It looked very specific, like, I want to make the stock market go up. I'm gonna say those things. Like, we're not going to raise rates by 75 basis points next month, just 50. And we're very confident that we can engineer a soft landing, meaning no recession. And then to make these comments that we've got inflation. We think inflation's peaked. We think we have it under control. Remind everybody, the Fed regularly gets everything wrong. Since Jay Powell, just in the last 5 years, Jay Powell has had four major policy mistakes just in the last 5 years. Okay, his credibility is shot. And when he looked in the camera to start his presser and said, "I'd like to first speak to the American people," kind of a "I feel your pain" moment. No, no. If they felt our pain, they wouldn't have done this in the first place, meaning caused this inflation, because inflation is always a monetary event, money printing event. That's inflation. They'll never admit that. So we're getting all of yesterday's gains have been reversed now. As I speak, the Dow Jones is down over 1,000 points. More concerning is that the NASDAQ is down almost 5%, semi's down almost 5%. They lead, and Dow's down 3%, S&P 500 is down 3.5%. A lot's going on. This morning we got the productivity numbers down 7.5%, the worst reading since 1947. Tomorrow we have the jobs report coming out. ADP jobs report was a miss. But the real story here today is why are rates spiking like this? If inflation is under control, and if the Fed doesn't think they have to hike as aggressively as they thought they would have had to, why is the 10-year up to a 3.08% today yield? Right? The VIX, by the way, volatility index up 24% right now. And again, when you're Jay Powell and his Fed governors, who consistently get major calls wrong, why can we have confidence in them? We can't. This is the bear market. Big moves higher are bear market rallies. That's how we're treating it. We think ultimately, again, this market, meaning the Dow Jones, S&P 500, are going to join NASDAQ and the Qs, the NASDAQ 100, in hitting official bear market status, meaning drop at least 20%. Right now, they're down about 10, 11, 12% in that ballpark. So they've got basically doubled, another 10% losses minimum. That's a magnet, we believe, that is tied to the S&P 500 and to the Dow Jones here. What else? Some important data, information we're sharing with our folks this morning. By the way, on the internals, which we track very carefully, under the hood, the foundation of the market, NYSE down volume right now, I just ran these numbers, is 96%. I don't think it'll stay that at the close, but if we get better than a 90% down volume day, we could be looking at a very good capitulation setup, maybe come Friday, Monday. I love Monday morning capitulations. They used to be a real thing back in the day, and they're not quite as common anymore, but I can tell you right now, this is how we're setting up with our folks. The best buying opportunities of my career, bar none, have come on Monday mornings following a bad Friday and then an ugly Monday morning open to give you true capitulation. We're starting to see high put call ratio, right? We know investor sentiment's really bearish. Now we're getting this big down volume day today. The trend, the ARMS index, hit a 1.95 today. Anything over 2 is panic. These are the kind of things we look for where we'll be taking profits on our hedges and then looking to go long. But again, that's only for the more aggressive trader. We're talking about now short-term bear market rallies of just lasting a few days to maybe a week or so, right? So anyway, if you like this kind of a commentary, and maybe if you are a little more open-minded to taking some shorter-term trades, come and join us at VRAinsider.com. Again, VRAinsider.com. We have 2 free weeks. Come and check it out. See if it's a good fit for you. If not, hey, thanks for coming by and checking us out. Okay, here's what we're telling our folks this morning. Again, it's a bear market rally. I have serious doubts whether or not we're going to have any kind of a sustained move higher, other than, again, a few days to move higher. Here's why. We have a lot of headwinds. Since quantitative easing first started in 2008, whenever the Fed has flipped to quantitative tightening, in other words, they bought all these bonds, $9 trillion worth of government debt right now, and now it's time to start selling some, even if they're only selling minuscule amounts. But history tells us whenever the Fed has started quantitative tightening, the markets have gone lower. Always and by a lot. This is a big headwind. So now, if you're long the market, you're fighting not only the Fed and quantitative tightening, but you're fighting the tape, because the tape is rolled over, meaning the charts have rolled over, right? We're well below the 200-day moving averages. The moving averages have rolled over. These are significant bearish events. And so it's a tough fight to win, when you've got to fight both the Fed and the tape. Also, we're in a very bearish period for the markets. The midterm election year cycle is very bearish from this point until about October, and then it gets quite bullish. That's more headwind, and we're now in sell and may go away as well. So, there are a lot of reasons, seasonally speaking, to be concerned. Our biggest concern, and I say it all the time because we've been saying it for 2 years now. Why would we change our tune now? We've been right, we believe. Team Biden, the elite ruling class, the deep state, whatever you want to call it, we've been witnessing event after event after event of intentional destruction. I don't think there's any question about that. You go back to, I know it's not cool to say this, and I wouldn't be allowed on any CNBC or Bloomberg by saying this. I think it's a feather in my cap personally. But from the pandemic on, all of these events that have happened have been negative. They've been horrible decisions, one after another, and now they continue. And now the market has picked up on this. That's what I believe. I think this realization is now sitting in, that what's happening with Team Biden is not a series of horrible mistakes by a brain-dead puppet president, right? These are intentional mistakes designed to harm this country. Why would they want to do that? Because that's Cloud Piven. That's the communist approach to taking down a democracy. Destroy the economy, make the people desperate, dependent on the government, and then communism wins. That's how they do it. That's their playbook. I think that's what we're witnessing, folks. This is the battle. Wake up. I think I know if you're listening and watching this right now, most likely you're already red-pilled. But I think it's important to spread that message, because the more people we can prepare, like this movie 2000 Mules. They've already been banned from Twitter, by the way. I mean, here's Elon Musk buys them and nothing changes, right? I'm glad to be off that platform. Final point I want to make, because it's an important analytical point based on data. Going back to the beginning of NASDAQ 100, what happened on Monday was important, because Monday we had a 1% move lower in the SP 500 to a new 52-week low, but then it reversed and it closed 1% higher. That's only happened 14 times for NASDAQ. Historically speaking, it's a very bearish outcome. Over the next 1 to 4 weeks, the markets have fallen by a great deal, an average loss of 8% over the next 30 days. So it's this is, investing is about probabilities, and using all the tools at your disposal, all the data you have access to, and making the best decisions possible. And that's been our approach. I had great mentors that taught me this way back. And finally, again, Jay Powell. The only person that's got less credibility than Jay Powell is probably the Nazi Jim Cramer. So he seems like a likable enough guy. But folks, the market's telling us right now that he can't be trusted. The market's telling us that yesterday was a fluke. His dovish presentation, short covering, was a fluke. And again, this is the bear market, and the rally should be sold and shorted into, unfortunately. All right, folks, always appreciate you watching. Hope you're having a great day, and please join us at the close for our daily VRA Investing podcast. We'll see you soon.